Today is a massive good day for the precious metals, for silver, for gold. I was wrong. I'm here to eat some crow. I made a big prediction yesterday about the CPI numbers. I was dead wrong. I said they would come in lower. They came in higher, but that's actually great news for silver and gold investors, because if today plays out the way it has played out so far, guys, we are absolutely into a new world. I'm going to explain to you the reasons why. The reasons why I still know in my heart that I believe we will see $44 silver by Christmas. Who knows how high the gold price will go, but it's a big deal you're here. Yes, the most important part of the basement is you. Thank you for being here. Thanks for spending this time with us. You're part of the group. You always belong here. Please give the video a thumbs up. Subscribe to the channel. We don't drive for subscribers that much, but it does help. So thank you for subscribing. And if you press the little bell notification, you will get notified every single time we put out a new video. Today is a massive, big day, guys. And I've got other big news that I was going to talk about first regarding silver and some new buyers, a new group who are showing up at the silver and gold party. But first, let's cover the big news of the day and why it's so important, the reason why it's so important. Let's go out to our trusty friends at CNBC. Today we got news, double whammy. This is big. Inflation rate at 2.4% in September, higher than expected. Oh my gosh, right? Ron was wrong. I said it would come in lower. I was dead wrong. I eat crow. However, right, the fact that we had this higher than expected inflation and double whammy on top of that, jobless claims are the highest since 2023. Let's just briefly read through the data as it came in. The CPI index, the inflation index, increased at a seasonally adjusted 0.2% for the month, putting the annual inflation rate at 2.4%. Both were 0.1% point, whatever, higher than forecast. Excluding food and energy, because we know none of us, we don't spend any of our money on food or energy, core prices rose 0.3% on the month, putting the annual rate at 3.3%. Both core readings also were 0.1% point. That doesn't sound right. Anyway, above forecast, higher than expected, despite my struggling with that verbiage. Also, initial filings for unemployment benefits took an unexpected turn higher, hitting a seasonally adjusted 258,000 for the week ending October 5th, the highest total since 2023, somewhere here in my notes. Yeah, so it was 258,000 initial jobless claims. Those are fresh, new unemployed people, 258,000 versus an expectation of 230,000 people. Why is this a big deal, right? I'll say one last time, I was wrong. I thought the inflation number would come in lower. I thought that would be good for gold and silver because that would indicate that the Fed has a lot more room to lower rates. Everything's out the window, guys. That's what's so important. All these old relationships. The Fed has lost its swagger, baby. Jerome Powell, they're still powerful. Don't get me wrong. I have a lot of respect for the Federal Reserve and the Treasury Department for that matter. However, the reality is that inflation now rules the day. And what we saw this morning and what we're seeing so far today in the gold and silver markets are making that super clear for us. We are in for some unbelievable good times as we head into the coming months, quarters, and years for the gold and silver price, because let's go out to channel sponsor Pimbex. We'll get an update. All right. This is always kind of the scary part of the show because that is not the updated price. I need to press the Pimbex magic button up there to see the updated price. Now, silver was up 43 cents. I think it's down a little bit now, but let's see. Take a deep breath. And silver's up 35 cents. Nonetheless, gold is up almost $16, $2,624. I was talking with some friends this morning, and we mentioned, like, I remember a year ago right now, I was in Quebec, Canada, had just gone on a tour of a gold mine, First Mining Gold's Du Parquet project. It was awesome. Okay. And we were sitting at the airport getting ready to leave, and gold was up $50 an ounce that morning, but it was still like $1,900 per ounce. We've come a long way. By the way, if you're looking to get your hands on some silver, gold, or platinum, I was looking at these this morning. I can't believe this. Here we go. Okay. 2024 Australian silver kangaroos, brilliant uncirculated, for 33, as low as $33 an ounce. Now, of course, that's if you buy in bulk and you use an ACH or cash type payment, but nonetheless, okay, we've got silver at almost $31 an ounce. Us Americans are spoiled. We can buy sovereign minted coins, brilliant uncirculated, for $2 over spot. I mean, heck, the Shanghai Gold Exchange is even more expensive, but please help support channel sponsor Pimbex. It's been over a year. I've had a great relationship with them, but what makes me feel the best about Pimbex is what I hear from you, the basement dweller community, the overwhelming positive response, the emails that I get thanking me, and I don't really need to be thanked, thank Pimbex, but for the great experiences you've had with Pimbex. If you're looking to get your hands on some gold, silver, or platinum group metals, check out Pimbex. They always have great pricing, great selection, and what's paramount is a company that you can trust. Now, back to this. Where were we? All right. Biggest day in the history of the universe. Right now, we're having it together, guys, for gold and silver. I don't care if silver ends the day even, right? Who knows? I got a feeling it could go much higher, right? My predictions have been wrong lately, so don't make any financial decisions based on anything that I'm sharing. But nonetheless, this is a huge deal. What today signifies for the gold and silver market is that inflation now rules the day. It's another piece of solid evidence telling us, right? If this was 2 years ago and we got higher than expected inflation, gold and silver would have been torpedoed. Had you told me yesterday that we were going to have higher than expected inflation numbers, I would have told you, boy, we might have a rough day in the gold and silver market. That has changed. This is very good news for the precious metals markets. On top of that, we've got this big issue right now with tons of uncertainty in the world. I'm hearing the top analyst. And why is that a big deal? Why is that a big, all this uncertainty, economic uncertainty, financial uncertainty, geopolitical relationship, AKA war uncertainty. It's a big deal because uncertainty is a massive driver for the gold price and the silver price. It's going to be interesting here as we get, so wait for it. I believe we're in for some very good times. Oh, the biggest news, I almost forgot, the biggest news of all, what this signifies for us this morning, what it means for silver and gold investors. Look, guys, those of you who've been around a while, and the new people are just as welcome, we'll do a quick review, but the people that have been here in the basement for a while know that I have been pounding the table on stagflation. I want you to think about something right now. What news did we get this morning? What were the two big news items we got this morning? And I'm going to give you the reason why that's a good situation, the most fertile soil on the history of the universe for higher silver prices and gold prices. We heard that inflation's up. Okay. We also heard that we had a rising number of first-time unemployment claims. That is stagflation. Those are two big indicators telling us stagflation is on the way. Stagflation is a stagnant economy, a recessionary economy, a slowing economy. Stagflation is the inflation. So it's a combination of a slowing economy and high inflation. In that environment, just think about this. The reasons why that's so conducive to higher precious metals prices is this. Is the economy stagnates, all right? Let's think about the stock market. Big Fortune 500 companies, their sales, right, are going to either go down or maybe just stay where they are, stagnate, right? But at the same time, here's their sales, their expenses go up and up and up because of inflation. And the inflation that we have right now is not because of a strong economy. It's because of a ridiculous amount of debt, right? It's because of geopolitical strife in the world. We're not having inflation because of a good thing, which would be a booming economy. No, we're having inflation because we've got a 35.8 trillion, or I exaggerated, I apologize, $35.7 trillion national debt. So as that happens, as the economy stagnates and sales stagnate and inflation comes up, that makes the stock market, that makes profits for big corporations, cash flows, right? I can use some fancy accounting terms for you, but it's basically profit that the big companies make go down. It makes the stock market stagnate, makes the stock market go down, okay? At the same time, all that money is looking for a new home. Now, we had a very similar circumstance to this unfold during the 1970s in this country. I remember it clear as day. I was born in 1970, right? My mom will vouch for this as being 100% true. The first word out of my mouth was stagflation. My parents were heartbroken. My next two words were buy gold, okay? And they didn't listen to me. No, on a serious note, stagflation ruled the day in the 1970s. You've heard me. You're going to get mad at me. I understand. You guys get mad at me all the time. That's okay. You don't have to like me all the time, right? I'm just giving you the truth. And it's good truth. You need to smile. It's time for us to smile, basement dwellers, because we know that in the 1970s, it's unbelievable the price increases that were experienced by silver and gold. Now, I'm not guaranteeing that that's going to happen again. However, it's kind of if you walked outside right now and you saw a bunch of big black dark clouds in the sky and they were moving towards you, you might think, oh, it's going to rain soon, right? Well, that's the situation. We have very similar conditions right now to what we had in the 1970s. And boy, you wouldn't even believe the increases. You wouldn't even believe if we were to have a fraction of the price increases that we had in silver and gold now compared to what we had then. Okay, stagflation is real. All right, let me give you the quick visual because he's itching to say hi to you. I've got somebody who wants to say hi to you. Hold on one second. There you go. Hello, everybody. It's your old friend Jerome Powell. On a serious note, this is your golden box because he's boxed in. He has a recession on one side and he has inflation on the other. Inflation that he cannot control. He's been neutered, right? The Fed is, they're going to talk. It's all they are is hot air at this point. The only thing that he can do, I think our friend Don Indris is sending me some more dollar toilet paper, right? Is this, okay? This is his only trick. I'll give you a visual, right? Create more money, right? Because when you're in a recession, you really need to lower interest rates, right? You need to stimulate the economy, print money, okay? But at the same time, that creates a lot more inflation, runaway inflation, and be ready for it. It's coming. And that's why I say unequivocally that in the next couple of years, you heard it here first, you're going to start to hear about the S word. You know what the S word is. You're also going to be hearing you're going to get inflation shoved down your throat. And I'm telling you this, your neighbors who are laughing at you right now, okay, not all of them, because all those, they're calling them Costco dads. All the Costco dads are going to Costco and buying themselves gold bars. Going to stick it in here with the diapers, right? Anyway, and it's great. I'm just having some fun. But all those people that are laughing at you right now are going to be looking at silver and gold. And you're already in the theater. You're already in the basement. Look, we got 500 people here right now. You're already here. You're early. Sometimes being early can feel a little bit like being wrong. Now let's talk about silver because this just adds more fuel to the fire, to what I believe is my strong conviction that we're in for some unbelievable good times in silver. I want to have this guy in the basement, Peter Croth. Peter Croth. He wrote the book. I can't reach it. It's over there. Shoot. Hold on one second, guys. I owe this guy. Hold on one second. I'll be right back. Don't leave, basement dwellers. Don't leave. Don't leave. I'm coming back. Here I come. Oh, shoot. I got the wrong book. What did I do? Oh, shoot. Okay, hold on here. Sorry. Hopefully we're still live. Are we having technical problems? I got up to get the book and I got the wrong book. I got Peter Grandich's book. Who doesn't love Peter Grandich? That's a great book. That's not the book I wanted to get. The one I wanted was already right over here. The Great Silver Bull. This is like a bestseller in Canada right now. Peter Croft. See that down there? Okay. Now, let's get back to what he had. This is good news for silver on top of stagflation. We're in good shape. You're in good hands with Ron's Basement. Peter Croft says, seems silver. Hold on here. Oh boy, we're having some technical. I don't know. I think we're still live. Okay, here we go. Peter Croft. Oh, shit. Shoot. I didn't say that. Seems silver buyers are back to buying ETFs. Silver ounces held are rising once again. This is a day of double unbelievable good news for silver buyers. Okay, what we saw happen this morning, the reaction to the inflation numbers and the worse than expected employment numbers is massive. That alone gives us reason for a lot of optimism in silver. But this, my friends, this is the big deal, and I'm going to tell you the reasons why right now. This shows silver ounces held. If you look at the top, let me get the crayons out. Okay. This black line is the price of the SLV ETF. This blue line is the number of ounces that were in it. This is big. As you can see, from about January of 2021, it looks like it peaked around, almost 675 million ounces, got all the way down here to 400 million ounces, so dropped by 275 million ounces. And now it's moving back up. I guess I don't need my crayons. They did it for me. Thank you, Peter. See the green arrow? Looks like this comes from Sentiment Trader. This is a huge deal on many, many levels, guys, because the missing link in the silver price has been the investor. I heard Jeffrey Christian say this, the guy from CPM Group, that some people, some people like him, some people, he tells his truth and stands by. He's not always real positive on silver and gold, but he said it himself. It's like 3 or 4 weeks ago that as we go into the next 6 months, the factor that really needs to come into play for silver, and if I remember correctly, he said he thought it was going to happen, is the investor coming back. This shows us that the investor is coming back. Now, that's one thing. Hold on, let me take a good look at you, basement dweller. That's one thing. But there's another. This is mind-blowing when we look at this chart. There's another. Do you know what it is? Do you? Do you already know? Huh? Then you know. Yeah. I'll let you come down here and do the live stream, Buttercup. Seriously, I appreciate you being here. We're going to get to this other major thing. But you know what? I haven't told you this for a while. It's a big deal. I know you love silver, or maybe you love gold, or maybe you have a close relationship with both of them. Thank you for being here. On behalf of Susie and myself, thank you to the moderators, Jake from Jake's Custom Parts, Big Tim, the Silver Shire, and there's one other one. Oh, yeah, the world famous Annie Oakley. And, of course, Susie, who's not here right now. She's off-site. But it's a big deal. The moderators, thank you. Okay, now let's get back to this. Oh, brother, this is a big deal, guys, because I just want you to look. If we go from 400 million ounces, which is kind of where we were, it went up by 50 million. If we go back from 450 to 650, that's another 200 million ounces of silver that will need to be purchased by the SLV ETF. I want to point this out to you. A lot of this decline, okay, that means they were selling silver. You know who's buying it? Probably China, but that's a whole different story. The silver price hung strong and actually did well during that. So just think. This is the reason why it's a big deal. Just think. what will happen, let's just say it goes back to where it was a few years ago. So that's 200 million ounces of silver that need to be purchased. Where's that going to come from? I got a chart I'm going to show you in a little bit. That's, I think, one of the best visual demonstrations of the supply and demand dynamics within the silver market. Where's the silver going to come from? Oh, okay. So that's number one. Oh my gosh. This is getting unbelievable. Let's go look briefly, and then we're going to come back to this crazy silver story. But I want to pull this chart up because I thought that it showed very clearly, better than any that I've seen lately or that I've observed lately. I'd like you to look on the upper left corner where it says $32. This is a 6-month chart of the spot silver price. $32. Do you see how many times we have bumped up against that? Uno, dos, tres, cuatro. 4 times. Now, I don't know if these, technically, I'm not a technical, but to me, these are attempts to break through $32. Okay. I know that 3 times is very unusual. 4 times is like almost unheard of, but we've seen a lot of unheard of things in the silver market. Nonetheless, eventually silver is going to break through this $32 level, and it is going to be a day. I want you to think about that. I mean, we briefly did the other day, by the way. We saw $33 silver, I think, in the futures market very briefly, but it's going to be incredibly interesting. Now, as we go back to what we looked at earlier, right? The fact that what if the SLV ETF has to buy 200 million ounces? What if it gets even more extreme? 300 million, 400 million ounces. That's one thing. But then we got to talk about the other little elephant in the room. Where's my elephant? There he is. There's another elephant in the room in the silver market. That's the silver elephant. And that is, what about like Russia? Now, they're going to be buying silver. Remember the Russian government? Like, that's the first government central bank in forever. Russia will be buying silver. The SLV is going to be trying to buy silver. Citigroup, whatever. Right? One of the most respected financial institutions. What did they say about silver? They said something very, very, very intriguing. Citibank said that the Chinese population is starting to buy silver as an investment. Okay. The SLV that we just talked about, that's as an investment. Okay. The Russian government, that's an investment. Investment demand is going to drive. Okay. It is the marginal source of demand that could make the silver price absolutely explode. Okay. Now what about the short position? Here, I did a little research for you. All right. You know what a bullion bank is? Well, I do. And I'm going to share this with you, though, because there's a lot of different there's a lot of different stories out there right now about swap dealers, bullion banks, short position. I heard somebody say there's a 590 million ounce short position on the silver market, the paper silver market, right? And remember, those short positions eventually must be covered. And how they're covered, what that means is people have to buy the silver back, because when you short something, you sell it with the intention of buying it back at a later date at a lower price. But if it goes against you and the price goes up, then you got to buy it back at a higher price. That, my friends, is the anatomy of a short squeeze. Remember short squeeze? So here, this came from AI, artificial intelligence. Swap dealers, also known as bullion banks. Are you wondering what a bullion bank is? I got the answer for you in just one second. They have increased their short positions in silver on the COMEX since February of 2024. Now, this was actually came from an article. I believe they pulled this information from July. As the commitment of traders, the COT report, they are short 217 million ounces of silver, or 43,400 contracts, because each contract is for 5,000 ounces of silver, a 5,000 ounce bar, I guess. I don't know. Anyway, if you multiply 43,400 times 5,000, you probably get very close to 217 million ounces. They are short. Let's just do a quick review. The SLV ETF. What if investors continue to buy and we get back to a level where we just were in the last few years? Could be hundreds of millions of ounces of silver that need to be bought. Citibank tells us the Chinese population is buying silver. We know the Russian government is buying some silver. We don't know how much the Russian government's buying, but what's significant there is that it's the first government or central bank to buy silver in decades. And then we've got this COT report, the big short position on the silver market by the bullion banks. You want to know what a bullion bank is? You know, I heard that term all the time and I thought I knew, but I wanted to confirm it. It's one of the big banks, right? JP Morgan, Goldman Sachs, I don't know, UBS. There's a bunch of them. You can Google it for yourself, but it's the big banks that deal in silver and gold. They are massively short. And I was watching Chris Marcus from Arcadia Economics last night. I think I'm remembering that correctly. Correct me if I'm wrong, Chris. Chris is a friend of mine. But he was talking about the COT report and the short and that what I'm hearing, and I'm not now putting words into Chris's mouth, is that there's like historically high. I don't think it's an all-time high, but a historically very high levels. And I think on gold, it might be a record, but nonetheless on silver and gold, at minimum, historically high short position by the big bullion banks. Guys, it could be snowball. I won't go down that path, but it could be snowball time for the silver and gold market. Let's go look at the silver supply. This chart I thought was awesome. Wait till you see this. Hold on here. Is that it? Oh, here, quickly. Oh, nope, I don't want to see you. This is a chart of the commitment of traders. Silver, 5,000 ounce bars, like I told you. On the top are the longs, okay? And on the bottom are the shorts, and that's where you can see it does look like this is for silver, like it was maybe a little higher back in May, but nonetheless, there's a massive, that's the commercials, the non-commercials, and the non-reportables. There's a big, it looks to me, net much longer short position. That's not my area of expertise. I'm not a COT report, futures market type guy, but I can tell you with a very high level of confidence that we are at historically very high levels in terms of the short positions in the silver market and the gold market. Now let's go over here, guys. This is a great one. You're going to love this. Silver supply and demand. This comes from Mining Visuals. Okay. Let's just read this one paragraph and then we're gonna literally dive into this chart because it is fascinating. In 2023, silver demand exceeded supply for the third consecutive year. Despite a 30% drop in the deficit to 184 million ounces, declines in investment. Okay, what did we just talk about? Why investment is so important. Declines in investment, jewelry, and silverware demand were offset by strong industrial demand. But we know that there's a potential that this investment demand could be taking off, especially industrial demand, especially from the solar sector. With limited supply growth, the supply-demand gap is forecasted to increase by 17% in 2024. Look at this. I wish you guys could see this a little. Can I zoom in on this? I don't know. Yeah, hold on a second. Let me see if I can zoom in. Make this a little. Yeah, there we go. No, but it's not letting me do it. Gosh darn it. Okay, here we go. I can zoom in on this. Here we go. Okay, so this is a graph that shows total supply. And this goes back to, we go down here, starts in 2000. It's about 10 years. Okay, this white line right here is the total. Where am I? There we are. Total supply of silver. This is all the silver, and this is the mining production. This is coming from all the mines in the world. Okay, 900 million right there. We're down to around 800 million now. And then this gap that goes up to total supply, that would represent like recycling, that type of thing. What this chart shows, okay, look at the bottom, electrical, look how that's gone up. Okay, net physical investment demand hasn't really gone up. This is like it feels like we're underwater when we're looking at this. There's some buried treasure down here. Physical demand is really, not as a whole, not gone up. Electrical has gone up. Jewelry demand kind of fluctuates about the same. Other industrial, brazing, silverware, photography. But what we want to look at, and what I think is, this is incredible when you look at this, is the fact that for the last, 4 or 5 years, let's go down. Hopefully you're not getting dizzy here. Yeah, since about 2021, this is the amount of total demand when you add those all together has so far exceeded the total supply. Remember, okay, that's 1.2 million ounces over there on the left-hand side. Imagine if we add another 200 million on top of that. If investment demand were to go up by 200 million ounces, right? If we hit this big inflation, it could be crazy, guys. It could be a very interesting scenario for those of us who hold physical gold and silver. And what about this? This came from our friend, one of us, basement dwellers. Just a quick demonstration of how, like, everywhere we look, there are new uses for silver. This comes from Germany. PV Magazine, Grid Parity, launches a modular solar carport. And doesn't this make sense? It says the German PV system provider said its new solar carport is an ideal solution for shopping centers, supermarkets, or DIY stores. God, I don't know about you, but I cannot stand when I have to go to Lowe's or Home Depot. I don't know why, I just can't stand it. It was conceived to operate with either standard or semi-transparent bifacial double glass photovoltaic solar panels. Okay. Does that not make sense? That in big parking lots where there's clear sunshine coming down, that there's a lot of benefits. Number one, it's generating electricity that feeds into electric cars. Number two, it's also shading the cars, right? Obviously, it's absorbing a lot of the sun UV rays. It just makes sense. And on top of it, when we look at this, what is there? 1, 2, 3, 4, 5, 6, 7 there's 28. That's probably about a kilogram, or let's say 20 ounces. Okay, 2/3 of a kilogram of silver. I could see those. Even now when we go to Six Flags with my kids, they have like EV stations all over the parking lot. I could totally see that becoming. Silver is everywhere. Silver is everything. All these other big news stories we were going to cover have been overshadowed by what I think today was critical news, that inflation is ruling the day. Let's run out. Let's be courageous, basement dwellers. Let's go out to Pimbex and do a quick update. Okay, look, this can change. But last we checked, we had silver up 35 cents. I'm going to press the Pimbex magic button and up 37 cents. Okay. This is a big day for the precious metals. Look, guys, we're ahead of the curve. Okay. We were talking about stuff 6 months ago that's true now. Right now, we're talking about stagflation. We were talking about stagflation then. But more and more, you're going to start hearing more and more people. And you're going to say, wow, we talked about that in Ron's basement, okay? Because number one, we dig a little deeper, right? Number two, I'm not speaking about myself. I know this from my Google Analytics. You guys are a little smarter than the average bears, right? And we love our bears. So sometimes being early can feel a little bit like being wrong, but I believe that we're in very good shape. If you hold silver, if you hold gold, if you hold precious metal mining stocks. Let's talk about, I want to talk about channel sponsor First Mining Gold, Canadian gold developer with 2 multi-million ounce projects in Canada. Dan Wilton, the CEO, just did a recent interview on Kitco. You can check that out, the Kitco Mining channel. And our friends at Fortuna Mining, who this morning announced their solid third quarter gold and silver production numbers from their mines in Latin America, where they have gold and silver mines, and West Africa, where they have extensive and growing gold mining operations. Thank you to all the channel sponsors. We appreciate it. Here's more proof. This guy, it's a rare day. This guy is losing his influence, I guess you would say, his strength, his power, right? Yesterday, look what I just dropped, right? My 1/10 ounce UK Britannias. Back to Jerome. Jerome Powell is going to be faced with one and one option only. And it's going to make you very happy. Yeah. Who doesn't like being happy that you own silver and gold? And that is to print money. We're not even going to waste our time going into the details. But yesterday, the big news story was the Fed released their FOMC, their meeting minutes from the last meeting they had when they dropped rates by 0.5 percentage point. And they were considered to be hawkish. I mean, think about this, guys. Hawkish. That means that the Fed could be tightening or swaying more toward the tightening side of the pendulum. Okay, gold and silver didn't really are starting to just kind of blow off the Fed. It's happening. It's a big deal. Again, the Fed has become. We've talked about this. Number one, the Federal Reserve Bank, okay, is no more federal than Federal Express. The Fed and Federal Reserve is no more federal than the Fed and Federal. The Federal Reserve is a privately owned bank owned by other banks, okay? That, my friends, is an absolute fact. Now they are losing their potency, I guess is the best way to say it, right? Gold and silver are starting to kind of laugh at the Fed, like, okay, whatever, Fed. I mean, it's real. It's the reality. It's the world we're living in right now. Again, you're ahead of the curve. Okay. Oh, let's talk about gold. Talk about silver investment going up. This from Reuters tells us something even as interesting, if not maybe a little more interesting about gold, because Reuters, look it up there. Ooh, Betsy, there's silver up 41 cents in the futures market, $31. Come on, 32. Okay, Reuters. Gold ETFs registered a 5th month of inflows in September. That's according to the World Gold Council. Global physically backed gold ETFs registered their 5th consecutive month of inflows in September as North America listed funds added to their holdings. The World Gold Council said that on Tuesday. Today's Thursday. Gold ETFs are up. Okay, after 3 consecutive years. This is the interesting thing. Okay, here it is. After 3 consecutive years of outflows against a backdrop of higher interest rates, the past 5 months have turned year-to-date net flows in dollar terms to a positive almost $400 million. Okay, guys, we made it. We made it through the storm. Okay, we are in a new paradigm for silver and gold, no matter how you want to slice it or dice it. If you were in silver and gold over the last 3 years, you know what I'm talking about. If you're new to the party, congratulations. You have great timing. In my opinion, I could be wrong. Don't make any financial decisions based on anything. This is just purely for entertainment purposes, although I'm right a lot more than I'm wrong, although I am often wrong, like I was yesterday about the CPI number today. Nonetheless, this is a big deal that you've survived the last 3 years. It's so critical that you understand, that we take a step back. We take a look at this from the outside. The silver price and the gold price performed exceedingly well in an environment that was not supportive, not conducive, however you want to say it, that was working against the silver price and gold price. And that went on for the last 2 or 3 years. I want you to think about, have you ever ridden a bicycle? I hope so, right? Most of us have. If you've ever ridden a bicycle and you're riding your bike down a perfectly flat road, but there's a 20-mile-an-hour wind blowing in your face, it slows you down. You have to work against that. In that, my friends, riding the bicycle into a 20-mile-an-hour wind is what the gold and silver price did up until about 5, 6, 7, 8 months ago. It's kind of, you can't pin it down. I said back in December that the tide had turned. But now I want you to think about the gold and silver price, that same bicycle, that same flat piece of land But right now, I'd almost say there's a 5-mile-an-hour tailwind for the gold price and the silver price. Things have changed. It's real. It's happened. Okay. It could change back. We never know, right? There's no way to definitively predict the future. But if we have calculators, do you have a calculator? Okay. Right. Go out to the US debt clock. Does your calculator work? Here, let's go. It's our daily trip. Well, we got to check on the dollar to silver ratio. Boy, I got in a lot of trouble for my 700 to 1. So I got in a lot of trouble, guys, because I said $700 silver. But I'm going to show you in a second. We're gonna go check on that. Okay, look. Oh, here we are. It's almost time for the big 35 trillion, 700 billion party for the U.S. national debt. If your calculator works and you can you see this being 50 trillion? I can in the next 5 to 10 years, maybe sooner. Maybe I'm wrong, but I can definitely see that being 50 trillion. If you come down here and you think about 50 trillion and like let's say 6% interest rates, that would make this number 3 trillion per year. Something very interesting. Two things. All right. This number, I go over this too often. Stay with me. This interest expense, which we get nothing for, that feeds into the budget deficit. The budget deficit feeds into the U.S. national debt. It gets bigger. It makes this get bigger. It's a doom spiral. Okay. It's an absolute doom spiral. But what's interesting, you may not know this, the U.S. national debt, it's breaking news. I read this just the other day. 70% of that 35 trillion is the result of interest expense that's been accrued over the last probably 20 or 30 years. 70%. So 20 trillion, 21 trillion, 22, whatever, 70% of 35 trillion is, what it'd be 21, almost 25 trillion of it is because of interest expense. Think about that. Okay. And so this interest expense that we're paying every year, we don't get anything in return for that. 2/3, 70% of the national debt is because of accrued interest expense. You got nothing. Unicorn fart dust, make believe, paper, whatever you want to call it. It's astounding. All right, let's go over. Last we checked, we were at 703 and oh, geez. Here we go, guys. The fun never ends. If you see my finger, we're now up. This dollar to silver ratio is now up to 708. Yes, that means that for each and every 1 ounce of silver, think about that. Throughout the world, there are people toiling in mines, underground, in harsh conditions, digging up silver ore, processing the silver ore. It's a hard thing to do. That's what makes silver, right? Here, you know what? Let's pull this up. Let's all say hi to our good friend Coin Shop Chris. He sent me that early in our relationship, and it really definitely cemented this silver, this 1 ounce of silver. Somebody had to toil and work to get this out of the ground. All that energy is stored in that silver. But throughout the world, people are toiling. Maybe there's about, 800 million ounces of silver they're going to be produced this year. That number is going down every year. We looked at that chart earlier. That's a fact, okay? 800 million with an M, million ounces of silver. But for each one, think about this. Here's the buffalo side. For each one of those that's being produced each year in the entire world, your government, if you're an American, right? I'm an American. Where is it? There it is. My self-waving flag, right? Your government is creating $708 through the M2 money supply, that alone. Now, I'm not saying that means that silver, that means silver should be $700 per ounce. But it begs the question, doesn't it, guys? Doesn't it beg the question? Like, what if we still were using these things? Silver certificates. And for each one of these that was printed, come on, focus. There we go. For each one of those that was printed, there had to be silver to back it up. I don't think we could have a 708 dollar to silver ratio. It's absolutely incredible. Okay. So we got gold. Gold and silver investors, the Western investor is coming back. Even the Costco dads are joining in, right? Okay, that's great. Right? Okay. What we really want to see are the Costco dads turning into the big online bullion dealer customers. I just would recommend, if you're a Costco dad or mom, right, check out our channel sponsor, Pembex. Nonetheless, this is great. This came from another the basement dweller. You guys are the best. This came from our friend Tim Zub. He's actually been on the channel before. He sent me this yesterday. This says, portfolios without gold. This means, like, if you have your wealth and you have no gold, and look at these people are driving down the street and they have their seatbelts around their neck, right? Like, if a crash happens, these people are in very, very bad shape. Let's briefly touch on the state of the U.S. economy, because we are armchair economists. And what do we learn there? Okay. Oh, we just learned that U.S. bankruptcies hit their second highest level in 14 years. U.S. bankruptcies hit 512 year to date, the most since 518 that occurred during the COVID crisis of 2020. Okay, outside of 2020, this was the second highest number of bankruptcies since 2010. But everything is strong. How strong? And this came from, let's give him global market investors. All right, those are the bankruptcies by a year. Let me zoom this down so you can see it. Guys, things are not good. I mean, the Bass Pro people, the Bass Pro people down in southern Missouri are shutting down are slowing down their production of bass boats. That'll tell you that things are not good in the U.S. economy. But look at this chart. They got circled, right? Year to date through September is the blue. There we go, right? Only 2020. And we got to go all the way back to 2010. That was after the GFC. I suspect that this number will continue to go up. I also suspect that I'll see you back here again in the basement. It's a big deal. Thank you. Did I miss any? Oh, there were no super chats. That's fine. That's great. Make sure I didn't miss any super chats, but I don't want to miss you next time. So please, subscribe to the channel. That does help, right? Get the word out to more people. Be good to yourself, right? Number one, take care of yourself. Be nice to yourself. It'll help you be nice to other people. Thank you to all the moderators. Thanks to you for being here. All right, guys, and I will see you next time. Have a great day.